Let's look at the last 3 years performance of AR model portfolio as of quarter ending December 2022. So we have two portfolios. Let's look at the first one, which is a wealth portfolio. This portfolio is a combination of equity mutual funds and debt mutual funds with 5 different asset allocations. For example, one can have investments of 60% into equity mutual funds and 40% into debt mutual funds to probably 100% to equity mutual funds. Let's look at the performance of 100% equity mutual fund portfolio as of December 22. So this portfolio has delivered returns about 15% per annum for last 3 years with a 0.5% alpha over the benchmark. Now, main reason for the lower alpha is because of the underperformance of mid cap and small cap, especially during the last quarter of the last financial year. And that time, if you look at the Nifty performance, it actually was a flattish one. But mid cap actually fell down by about 2.5% and small cap fell down by about 7.5% during that time. And this was mainly because of the Russia-Ukraine war. And this underperformance continues even in the 9 months of this financial year. So why it has affected our portfolio? We hold about 45 to 50% into mid cap and small cap. And that's why you can see the lower alpha during this time. So do we continue to hold this particular allocation? The answer is yes. We are still comfortable with this particular allocation. And we believe that as and when mid cap and small cap will start performing, this will create a substantial alpha in this particular portfolio. Despite this market condition, let's look at how our second portfolio, which is a Well Plus portfolio, how it has performed during the same time. So this particular portfolio has delivered returns about 16% per annum for last 3 years with 1.5% alpha over the benchmark. And the main reason for this is the combination of equity mutual funds, debt mutual funds and market-linked debentures in this particular portfolio. So this portfolio would have about approximately 40% investments into market-linked debentures and the balance 60% investments gets into equity and debt mutual funds. Now, typically, market-linked debentures offers returns about 13 to 14%, even if the market movement is about 3 to 5% per annum. And hence, when market is flattish, the combination of equity mutual funds, debt mutual funds and market-linked debentures will give you returns about double digit during that time. And this has clearly reflected in a Well Plus portfolio in last 3 years performance. After looking at the returns, let's look at how AR portfolio has performed on the second important parameter, which is risk. So how do we calculate the risk? The statistical tool to measure the risk is standard deviation. It tells you how much you're deviating from the mean. For example, Wealth portfolio has a standard deviation about 14%. And if you're expecting returns about 12%, it will deviate 12 plus 14, 12 minus 14. That's the kind of a swing you can experience from Wealth portfolio. As compared to this, if you look at the Wealth Plus portfolio, it has a standard deviation about 10%. So if you're expecting returns of 12%, it will deviate 12 plus 10, 12 minus 10, which clearly means that Wealth Plus portfolio can potentially reduce the risk of your portfolio by about 25% as compared to the benchmark. And if you have a mutual fund, stocks, PMSs, it can also reduce the risk by about 30 to 40%. So in short, Wealth Plus portfolio is more efficient as it has delivered returns about 16% at much lower risk. Finally, let's look at the Wealth Plus journey for last 3.5 years where market has been volatile. In fact, we had shared this data with you in the earlier quarterly updates as well, where we mentioned that the range bound phase of 1920 or the pandemic low of March 20 or even the bull phase of 2021, all the three phases, Wealth Plus portfolio has clearly generated 3 to 5% alpha or benchmark. And if you see the performance as of date, the initial investment of 20 lakh rupees in April 19 would have gone to 34 lakhs in the Wealth Plus portfolio as compared to 31 lakhs in the benchmark with 3.5% alpha. Hence, Wealth Plus journey is much smoother across all market cycles. So what is actionable? As we mentioned time and again, asset allocation creates a bigger impact in your long-term wealth creation journey. Hence, would request you to look at all the investments across all the asset classes. For example, you may have the mutual funds outside AR or PMSs or stocks or bank fixed deposits, etc. Get all these products reviewed or your portfolio reviewed from us, and we will help you out to realign it in such a fashion that it will deliver returns with high degree of probability at much lower risk across all the market cycles.